We do these events every month where we bring in a different investor and we talk about their investment thesis, their approach to the market, some of their advice to early stage startup companies or startup companies in general, as far as their fundraising process, how to position themselves for investors, or that sort of advice. And we also partner with several organizations that help us put on this event. And so we'll do those introductions really quick. We'll start with Trinet. Anna, do you want to give an intro really quick?
Yeah, hi everyone. It's good to see you all, and I'm excited to be here. Just to give you a little background on Trinet. So we are basically an outsourced human resources solution for early stage startups. We help you with all things to do with your employees. So that's payroll, benefits, workers' comp, compliance, kind of keep you in, build up that HR infrastructure so that you can scale and grow. Some of the local LA companies we've helped are Netflix, Ring, Dollar Shave Club, Snap. So we'd love to work with you guys in the same way. Thanks so much, Heidi.
We also have Early Growth Financial. Dan, did you want to give a quick intro?
Sure. Let me see if our video is working here. Yeah, perfect. So Early Growth has been around for over 10 years, and we've been supporting startups by handling the finance function, providing CFOs and accountants so that everything related to finances, from the scorekeeping of day-to-day bookkeeping to month-to-month financial reporting to strategic issues that you're dealing with board members, investors, raising capital, scaling and growing a business is taken care of. So our CFOs come with 25 plus years experience, and it's an amazing addition to a startup team so that you can stay focused on your customers, your product, your service. We're a national firm and really happy to support our other partners here with doing these monthly events. If you have any questions, we're at earlygrowth.com and feel free to send an email directly to me at dan@earlygrowth.com. Thanks, Heidi.
Yep, absolutely. Do we have anybody from SVB, from Silicon Valley Bank? All right, so I'll give their quick pitch. So Silicon Valley Bank is the premier bank and lender for startup companies. They have great services, great perks, partnerships, things of that nature to help their clients get onboarded with their first business bank. They also do have a strategic debt financing arm of the firm. So you want to reach out to DeMarcus Williams, who's one of our partners here, and I'm happy to connect you if you need those services. Do we have Peter Mansfield from CMO.LA? No, okay, so I will do the intro for Peter as well. Peter Mansfield is amazing. So he is one of the premier CMOs. Specifically, he meets with companies in the fintech space, in the fintech vertical. He knows very, very well connected in that ecosystem with funding as well as partnerships, things of that nature. And anything that you're needing for CMO level advisement, he's your guy. So I'll tell you a little bit about Stubbs, Alderton, and Markiles. So we're a full-service business law firm. We do everything from incorporations all the way through mergers and acquisitions, venture capital financings, early stage through late stage, intellectual property, data, privacy, cybersecurity, entertainment, media, tax, and business litigation. And hopefully you won't need that, but we do full service, everything for the evolutionary path for a company. And Louis, did you want to talk a little bit about your practice before we get started?
Sure, I'll give a very brief introduction. Good afternoon, everyone. My name is Louis Wharton. I'm a partner with Stubbs, Alderton, Markiles. My practice primarily focuses on representing investors and entrepreneurs in structuring and negotiating financing transactions. So anything from a convertible note all the way to a Series B or Series C financing. I also have experience working with venture debt and debt offerings as well. Happy to be moderating and looking forward to our discussion.
Excellent. So before we get started, actually, and then Len, I don't know if Len is still on here. Did you want to talk a little bit about the Precelerator before we get started?
Yeah, just real quickly, good morning, everybody. Our Precelerator program is run by the law firm, Stubbs, Alderton, Markiles. We are a true accelerator looking for good founders, excellent founders who need a boost in getting their business not just started, but capitalized. We have a great offering with mentors, workshops, workspace, legal services, we make an investment. You can look up all those attributes online, and I encourage you to do so at precelerator.com, and I'll let it go from there.
Excellent. So Paige, will you give a brief introduction of you and your background, and then we'll get more into Outlander Labs and what you guys are looking for in companies and some of the questions that we've had.
Yep, happy to. So I'm Paige Craig. I've been investing now for, I guess, 12 years, if you can believe it. I sold my military company. It was a military startup 12 years ago, and started angel investing back in 2009. I've done almost 120 deals since then. 13 of those are now multi-billion-dollar companies, including Postmates, Bird, Twitter, Gusto, Wish. Started a new fund, Outlander Labs, with some amazing people. We're focused on the Southeast. But more importantly, two big things are different about us. My wife and I built this fund together, and we decided from day one that the GP would be diverse. So right now, 65% of the GP is owned by Black and female investors. Half the team are women, half the team are Black leaders. And our fund doesn't invest specifically in Black, Latino, female. We have no specific goals for founders. But our belief was that if we're going to build something right, we should change it from the top down. And thankfully, it seems like all of America is starting to jump on this. The second thing is we're focused on the Southeast because this region has been ignored. It's just a structural failure. It's a failure on my part. I never realized there was opportunity here. And we moved back because my wife is from Alabama, and we wanted to be close to family, to start our own family. But the bottom line is we invest in very, very early stage founders, and we're doing it just a little bit differently this time.
Great. Thanks, Paige. So let's dive a little more deeply into the diversity angle. And I understand that your GP is diverse. Why was it necessary, and why did you guys think it was necessary to specifically focus on, I think you've touched on this, but maybe we can have a little more detail, to have a GP that was diverse? Why is that necessary, I guess, in today's venture ecosystem?
Yeah, I think the contrast here is if you had asked me, because I've spoken on this topic at Cross Campus 6 years ago, talking about diversity and why we need to have diversity. But what really struck me is with the murder of George Floyd is the big thing we've all been doing wrong, or a lot of us have been doing wrong, is that we thought responsibility stopped at our door. And if we and our kids were good people, that was good. That was okay. And what that murder made me realize is that we're all responsible to some degree for not going above and beyond. And I know it's a simple shift, but it's actually a really big shift, because if we put ourselves in the shoes of Black, Latino, female, doesn't matter, founder, investor, leader, student, whatever, if you had this happening to you, systemic racism, systemic violence, systemic imprisonment, you would expect that society would step up and work with you, defend you, and fight for you. And what that made me realize is, like, we've been irresponsible not being proactive. And so I think every person, whether you can pull an economic lever, a social lever, it doesn't matter what that lever is, but reach up and pull it. And I think that's one of the biggest, most profound changes that hopefully ripples across this country, is that when you think about what we do as tech, right? We think of this upswelling of like social platforms, peer-to-peer commerce. Well, what about an upswelling of people? Millions of people each pulling a small lever? That might actually change America positively forever. So that's why we did it. This is the lever that we can pull as the founders of a fund. And I also think it's the right lever to pull. I had some interesting feedback from other VCs who objected to me doing it. And one of the objections was a systemic problem, saying, look, if you're going to hire female GPs and Black GPs and Latino GPs, where are you going to find them? And I think a lot of people have heard this, and I don't think that's meant to be misogynist or racist. It speaks to a bigger problem, which is the pipelines are screwed up. When I go out there and I look at what my pipeline looked like, because we started doing this 8 months ago, asking friends in Atlanta, hey, do you know someone good? Is there someone I should hire? Is there an associate, a junior partner, a senior partner? If you looked at the backgrounds of these people, which we did, after George Floyd's murder, we looked at our pipeline, we realized our pipeline looks a lot like us. Mm-hmm. And so we deliberately changed that.
Well, I think it's interesting because it's somewhat of a self-fulfilling prophecy, right? To the extent that someone says, well, where are you going to find them? The point is, you're not going to find them if you don't assist in creating them, right? And providing the opportunities that are necessary for a team to gain the experience to rise to the level of managing a fund. I guess a corollary question would be, I understand that the fund doesn't have a focus on particular diversity goals, but as a consequence of having diverse GPs, and as a consequence of locating in the Southeast, have you found that a positive externality from those decisions results in your fund investing in more diverse opportunities, right? So has diversity in your portfolio increased as a consequence of having diverse GPs and being located in the Southeast?
Yeah, well, we're very new, so it's hard to say that there's much delta to measure, but I can give you a snapshot. And when I looked last week, our pipeline of deals, qualified deals that made it through to the level where it's now partner meetings, it's about 75% diverse, meaning founded by, not employees, but founded by, led by Black, female, or Latino. We also track LGBTQ, we track veterans are not included in that number, and physically disabled. And the point is that we should be a lot more inclusive in how we look at anything, whether it's venture or lending from a bank. And I think the right way to do it is to look at your pipeline. Your pipeline should be representative of the population that you work with. And so I think our pipeline is very diverse. And that's a function of, we source deals through this whole technique I go through of hunting, trading, trapping, and farming. Mm-hmm. But having diverse partners and having diverse networks leads to diversity in the pipeline. I think the other important point is to be explicit with your statements and with your content so that you are approachable. Because I think there's been so many doors shut. I think it's important to say that you are open for business.
Great. Well, why don't we talk a little bit about Outlander Labs' investment process. So what do you look for when you're looking at an investment opportunity? What's the ideal candidate for a role or participation in Outlander Labs?
We're a people fund. We look for the qualities of people. Now, I have my own 33-point founder framework that I break it down into vision, intelligence, execution, and character. What I'm doing with the other partners is they're all developing their own founder frameworks. But this whole idea of the founder framework is something I came up with 8-9 years ago. And the idea was, I'm a human factors guy. I don't look at, I do look at markets and business models, but in the earliest stages of a company, I think the best thing you can know are the founders themselves. The best thing that we can make judgments on are the people building the company. But we have to be careful there if the way we look at founders is biased, because no one starts a fund and says, hey, let me invest in idiots. We all say we invest in great people. But the problem is every single person on this screen has a different definition of good and a different definition of founder. And so what I like to practice, what I've practiced as an angel and then with Arena and now with Outlander, is to have a framework that judges people on their abilities, their experience, their behavior, not on how they look or where they came from. And so I think we need to get to these consistent frameworks so that we treat people fairly. And the reality is, like, my framework has worked pretty well.
Are you focused on particular industries or segments, or are you agnostic? So can anyone in any industry?
Pretty much, we are across the board just looking for ridiculously brilliant, driven, unique people. And the reason for the name Outlander is that we like to appeal to people who are different. Like, we want someone who had to travel really far, had to really overcome to get to where they are. I personally like that challenge. I like meeting people who fought and really come far to get to where they are today when they're pitching me. So what makes you different, what sets you apart, what maybe made you feel lonely in school, and what made you feel different in society, like, that could be a real source of strength. And we want to focus on finding those people.
Great. Well, let's maybe get into a bit of the nuts and bolts. So to the extent that you've made an investment decision, what's the check size look like? What rights are you expecting in connection with making that investment? And what other, externalities come with an investment from Outlander Labs?
So we're a pre-seed fund, so we generally will invest $100,000 to $300,000. We will invest pre-revenue, pre-product, pre-data, pre-everything, except we need to have a person there to give the money to. Okay. But we invest crazy early. We generally want to own between 8 to 15% of a business, depending on the risk, what the cap table looks like, stage of the business. But generally, we're looking for that low double-digit ownership for a 100 to 300K check. We might go up to 500, depending on the business. And then we don't take board seats. But there is one big shift, which is we're a pretty large team. If you go and look at the Outlander Labs team, the reason we're large is that we're building the framework to do a much bigger fund across the Southeast, because we're servicing New Orleans to Birmingham, Nashville, Chattanooga, Atlanta, Raleigh, and we really have a big region. And we're also evolving this business to work in a post-COVID environment, to source, diligence, and support founders remotely. I think that's going to unlock a lot of opportunity. So we don't want board seats, but we do want our pro rata. And of course, if there's a VC that comes down the road that needs us to be flexible, we may, but we do need those pro rata rights. And typical things, we're looking for, an MFN clause. So if you go and do another round and put another good clause in there that's for someone else, we're going to want that as well. We're going to have some restrictions on your fundraising, and we're going to, and part of that is to make sure that you don't do these 2, 3, 4 layers of notes or safes that just destroy your cap table. But the idea is not to bind people, but to be helpful. And we also make a commitment that once we invest, we're there for 2 years. One of my biggest criticisms for accelerators and incubators, for some, is that they're there for a 2, 3, 4 month period, but they're not there for the long haul. And having now done 100+ deals, there are companies that take a couple of years to get to product market fit, and we want to be there to support founders through that journey.
Great. And you guys have a fairly robust mentor network, if I'm not mistaken. So can you maybe talk a little about that, and again, the access to that network and what it means for companies in which you invest?
Yeah, after 12 years, we've developed a pretty good network. We called and spoke to several hundred mentors over the last 5 months. We have 260 mentors as of last week signed up. These are founders of multi-billion-dollar tech companies, the founders who've been there from the 0 to the billion, partners at VC firms, associates. We have product, marketing, engineering, DevOps. We have a really wide assortment. But we've also been, we've looked for diversity, not just in our LP base and our founders, but our mentors are diverse themselves.
Great. And is that network just broadly and generally available to members of our portfolio companies, or is there a process pursuant to which they've got to figure out who's got the right resources or skill set and then make that available? So it seems like it would be a huge benefit if it's just generally available, because these folks have been there and they've done it. And so they're really providing opportunities to leverage their experience to facilitate growth. So so
our commitment to the mentors is we don't take an email list and give it to every founder and then they blast them. We act a little bit like air traffic control, figuring out, okay, what do you need and who would be the right type of fit for you? And then we reach out and we let mentors know, hey, here are some founders, here's their background, here's their story. Would you be willing to take an intro? Because what I don't want to do is abuse that essentially marketplace. And you don't want to have a mentor being hit up 10 times, right? There's some mentors out there, everyone's going to hit that name. And so we have to balance both sides. We want the mentors to be there for the long haul. And that's the reason we also have so many mentors, is I really want to put together long-term relationships if possible, and to really curate these connections between founders and mentors.
Great. You referenced COVID a short while ago, so let's talk about it. So how has it impacted the decision-making process, right, in connection with determining whether to make an investment? And what changes have you guys made, and which of those changes do you think will probably be long-term, arising from the pandemic?
Yeah, I think our industry has already been dramatically impacted. If you had asked me in February, would I source, diligence, and conduct a deal completely remotely? The answer would be no, not going to happen. And that's a blind spot that I had. I think it's a blind spot that 98% of VCs had. A few were very progressive and realized this was dumb. But I was not on that side. I was on the dumb side, thinking I had to meet every single founder. So with that change, I do completely believe that remote financing is happening now. I think that once those floodgates open up, which they're opening right now, you can't stop them.
Awesome.
The upside is that capital is going to flow to founders versus founders having to flow to capital.
Yeah.
Right. That's a big change.
Can I drill on that a little? So what was it about the face-to-face meeting that you think was so critical, right, in the prior process for making an investment decision? And how have you overcome that in the virtual realm?
I think the answer is actually pretty simple. I mean, we are people, and people are social creatures. We're used to, we grew up in families, we grew up in schools, we grew up in offices. We are used to being social, and human inertia is one of the strongest forces in the world. And once people do things, it's hard to change user behavior. Like we preach this to founders all the time, but COVID is a forcing function, much like World War II, that brought about, women in the workplace, right? Brought about, change, the dollar, right? Bretton Woods made the dollar the instrument, of the world. Soviet Union, the United States came to power. Well, COVID is a forcing function. It's the largest shared human experience ever. And that forcing function is making us do things like deploy capital remotely. It also means that founders, like founder talent and the way companies develop is fundamentally different. I don't have to have this litmus test called, are you in Silicon Valley, LA, or New York City so that I can invest in you? But there's a new challenge. If my filter is, if my pipeline is so wide that I can invest from DC to New Orleans, from St. Louis to Tampa, how do I cover 20 different cities, right? Just speaking from a VC, how do I source the right deals? How do I vet them? How do I diligence them? And how do I support them? Well, the technical the tools are there, right? So we can do these connections, we can talk to people. I think we actually lied to ourselves a little bit about this whole in-person thing, because the reality is, how many of you are experts in micro expressions, if you even believe that business, right? And I spent half my life operating in Syria, Iraq, Afghanistan, working in tribal units, working in small groups. And I had to work with people and understand who is a friend and who is an enemy. And I was heavily biased to think that in-person thing mattered. I think it's largely just, it's bias. It's this weird thing that we just grew up doing, and COVID's making us change.
I think that's as good an answer as any.
It's uncomfortable, right? Like none of us are comfortable yet in this. We do want to go back to physical. I don't think we're going to live like this forever, but I think it's going to make us adopt technologies and ways of doing business. They're actually more efficient.
I generally agree with that. I think that folks have seen that you can be efficient in this process using digital and technological means. And so I think that while we probably will revert somewhat to the old ways, I think that some of the positive changes are here to stay. Question regarding assessing the investment opportunity. So we've had some discussion with respect to how investors, and particularly Outlander Labs, looks at investment opportunities, but I'd like to maybe flip it around a bit, particularly given your experience as an operator. What advice would you offer to founders with respect to assessing investment from a particular partner or particular partners, right? You've got potentially financial investors that can come in. You've got strategic investors that can come in. Not every financial investor is an equal investor. What advice would you offer to founders in how to assess and ways to think about assessing potential investment from various partners?
Yeah, I mean, that's a really deep question, because there's a lot of things founders should do when they look at investors. I think some basic principles are a founder should talk to multiple investors at the same time. They should never tell each other who they're talking to. Don't tell VCs which VCs you're talking to. Ask very purposeful questions of the VC to figure out how they're going to add value. Because the same way that we probe founders, it's not just that we have a lot of respect for founders that probe us for what we add value to, but it's like, just like that founder that you build the company with, the VCs and angels that you work with, you can't really change it once they're on the cap table. I mean, you can ignore them, but they're going to be there. And the reality is, good investors can do a lot for you, but bad investors can also give you really poor advice and just be really poor mentors. So I think a great VC can be a real force multiplier, but you as a founder have to ask yourself, like, where do you fall short and what do you need from investors? And I think there's some founders who think that they need to appear as if they have it all covered. And like, I just need your money, like, give me the check, go home, I'll figure it out. But the reality is, like, none of us believe that. Anyone who's been in this business knows that you don't know it all, especially at the stage that we invest in, and any stage we're all still figuring it out. So you have to tread that line where you don't look scared and timid, but it's okay to say, hey, you know, here's some areas. Like, I had an amazing chat with some guys this morning who are incredible product and technical experts, but they were very honest on their lack of marketing and brand and sales, and they're looking for, and they had very clear goals as to what they wanted out of an investor, and that was very impressive.
Mm-hmm. What about potentially thinking about alternative financing, right? So I think we've had several panelists who've somewhere or another indicated, look, not every company is a venture fundable company. Not every company requires or needs venture capital financing. So maybe any guidance or suggestions with respect to that, you know, process, thinking about whether or not your company and opportunity is the right fit for VC, and if it's not, what alternative options should you be considering? And again, just generally.
Yeah, I mean, I built my first business by borrowing money from a bank and leveraging my home, and thank God I did. But not every business, in fact, most businesses shouldn't be venture funded. And I think it's great to see funds like Collab come out and Pipe, who are, you know, letting you finance the business versus taking equity. I think blending venture debt along with venture capital dollars is a great way. Sometimes you can build a company without even talking to someone like me. I can't really give you good advice because that's not what I do. My focus is on the VC side, but I've told many founders, especially, you know, that's so worded. I've had smaller businesses talk to me about their company. Mm-hmm. And I think sometimes we as VCs sometimes see a business potential, and we want a business to be a certain pace and a certain size that maybe the founder doesn't want it to be. Yeah. And it's important for us to tell the founders, like, hey, you know, maybe you're better off seeking a different source of capital.
Understood.
Because we have certain expectations. We need to return our funds, you know, we have to get money out the door for our LPs, but not every business in America needs to go be $1 billion company.
Mm-hmm. Great. Understanding that you are industry agnostic, are there particular areas or segments where you see significant growth opportunity over the next 5 to 10 years? And, you know, are you particularly interested, notwithstanding the fact that you're agnostic, in looking at opportunities in those segments? So any particular segments or industries that you're interested in that you think have meaningful growth opportunities over the next, let's say, 5 to 10 years?
Yeah, I think the future of work might be changing, but I maintain a running list of theses that I look for. That doesn't mean that's the only thing we invest in. But I'm interested in, I think, fertility. I've been talking about for 3 years is a huge marketplace for men and for women, especially as we're delaying, you know, childbirth. We're working, you know, women are having longer careers. So I think, and we've barely penetrated that market. If you look at like company policies around fertility, insurance policies, the workplace, we're in like not even the first inning of how companies and consumers are adapting to this new reality. VR and AR, we have to see that mass adoption on the consumer side. Mm-hmm. I personally kind of feel like this might be the decade that we see the consumer adoption. And we're very interested in exploring. We're not going to go too fast because I think we might still be a little bit too early on that, but I do think it's the future. I'm a huge fan of IoT. I think we're finally at the point where is extremely approachable. Just like, 7 years ago, it became approachable to do an app. I think the barriers to designing and fabbing and printing and deploying IoT have gotten to the point where founding teams can actually innovate around consumer IoT and enterprise IoT. So I'd say that's probably a very big focus of ours. Mm-hmm. I've had a great track record with AI, and I want to continue to find companies that leverage AI for a true consumer or enterprise benefit.
Mm-hmm. Great. And what role, I guess, does IP protection play in your analysis, right? So does it need to be almost none? Okay.
Yeah, I mean, there's certainly areas where it's important, but we're at the stage where we focus on the founder and the big opportunity. We'll probably defer to other VCs to start thinking about the, IP side of things. We're not worried about that at our stage. Now, we do think about things like, hey, if you work for someone else and took their IP, let's make sure that we're not messing that up from day one. But we're not really looking at IP as leverage.
So Heidi, maybe I'll pause here. I thought that I saw some pop-ups in the chat menu, so I don't know if there are questions now that folks would like to ask. If not, Paige and I can continue, but I'll give this opportunity for audience questions.
Sure. So we have a couple questions that came through. So one is, what industries are most developed in the Southeast? So what are you seeing as far as in your pipeline and deal flow for the companies that are applying from your vicinity?
One that stands out is logistics and manufacturing. Is there? Whether you look at Chattanooga, Atlanta, there's an incredible amount of manufacturing and logistics experience here. And actually, one founder, there's a Black founder here who is using AI and vision to do automated inventory. There's another team up in Arkansas that's using AI to do route planning inside logistics to make it more efficient. And so we see a lot of that. Fintech, there's an incredible amount of fintech out here. The surprising thing, though, is what I don't see. And I think that's actually where there's a big opportunity is, having that contrast of the West Coast and now here is that Atlanta and the South is a cultural capital of this country. And yet we don't see a lot of consumer startups coming out of here. And that's a problem. And it's largely a result of the VC ecosystem doesn't reward consumer startups right now. It's very focused on seeing revenue from day one. I mean, you kind of have to get to multi-million-dollar ARR quite often to get funding out here. But I think that's changing. There are other funds like Overline, Tech Square. There are folks looking for Cassius looking for early stage consumer. And I think that this decade we'll see consumer. Atlanta had Yik Yak almost make it. There's a really cool company called Switchyards, which was very brick and mortar, is now kind of transitioning to a membership model. But I think we're going to see a lot more consumer coming out of the South. And so that's actually really appealing to me.
So another question came in. It says, in addition to evaluating the founder, what are some key business growth metrics you expect to see when investing in a company? So what are the metrics that you're looking for at the early stage?
I mean, like I said before, I'm not really a business metrics focused person at this stage at pre-seed because it's really about the people. And then after the people, which is about 75% of my decision, I'm focused on how big is that potential market. I'm trying to ride that science fiction train with you and believe that your thing is possible. And I'm asking myself, how big does it get? Is the timing right? Is the vision that you outline believable? Are those social, technological, regulatory things going to happen that you predict are going to happen in the world? Business metrics wise, there's not much there for me to judge. I mean, maybe you are doing some revenue, you've got some customers. If you do have revenue or customers, probably the most telling thing to me are metrics that can tell me how much value you're creating for your customer, whether that's a business or a consumer. And so that could be churn, it could be AOV, but you showing me data that you're creating value and increasing that value, that's probably the most important thing. But those are going to be really small numbers at the stage that I invest in.
We have a specific question regarding MarTech. So what is your opinion on an influencer marketing and the software around understanding influencer data to amplify its engagement?
I'll say that I am by far not a MarTech or ad tech expert. So I'll just give opinions. They're probably all wrong. I fully believe that influencer marketing is the future. I think that this Generation V, this virtual generation, for them, TikTok and YouTube is far more important than, concerts and Springsteen and what we grew up with. People aren't reading, help manuals. They're watching videos on how to use, kids watch videos. They don't read training manuals or technical manuals. And social media influencers are real. I was watching a documentary about, Instagram influencers and TikTok, and those influencers are the future. I think it's really amazing that we're in the very beginning of that shift from the, A to Z celebrities to this entire parallel universe of micro celebrities that exist in social media that have, as much or more impact. So I'm a big fan of it, but I'll say I'm also not an expert. So I'm open to ideas there, but I probably don't have much wisdom.
So, this is a question I get asked a lot, but so I'm interested to see what your answer is. Talking about valuation for pre-seed founders, what's your advice as far as how to answer that question for pre-seed early stage founders?
Are they asking how to tell a VC what their valuation should be, how to get into the valuation discussion?
About creating a valuation for pre-seed, being that the valuation is typically based on first money in.
Yeah, so I think, I just went through this with a lady today. She kept talking to me about valuation, and my point to her was she and I needed to have a talk about whether we wanted to work together first, and then we could talk about the price. And I think too often founders anchor around a price versus a fit. I think it's better to talk to your VCs about fit. And of course, I'm going to want to know, are we in the range of is this a sedan or a sports car? What's the general range that we're looking at? And so you as a founder can give me some clues, some hints that it's in my price range. You could say, hey, I've looked at the deals you've done, the valuations that you invest behind, and we haven't picked the exact number, but we're squarely within the space that you invest in. But I'd like to focus on, here's 3 things that we're focused on that we're trying to find in investors would be a good fit. Focus on the relationship and the match, and then start talking price. And honestly, you can probably only talk a VC out of doing a deal with you by talking price early. But if I fall in love with you and your business, you can probably pull me into your price.
Got it. Great advice. There's a more technical question. So we have this person has a company that's multi-platform alternative energy production, and they still need to do a lot of R&D on the product. Is that something that would be a no-go? And are you wanting them to be a little bit further along if they come with a product like that?
My guess is if this is enterprise energy production, it's outside my wheelhouse. It's a little too deep tech, but there are great companies like Lux. There's Wonder in LA. There are folks that do it, but it's probably, we don't go deep into the true science and technology stuff, frontier technology.
Got it. Louis, did you have other questions that you wanted to address?
I do, but if we have other audience questions, I'd prefer to get to those.
Feel free to add any of your questions to the chat function, and I will answer those for you.
Okay, so we're done with the current list, Heidi? Okay.
Currently.
No problem. Okay, Paige. So while we wait for additional questions, I've got a question with respect to, we've heard a lot of information, I think, recently regarding, access to platforms that, distribute applications, right? So Google and Apple and the control that they have with respect to access to their platforms for technology companies. I don't know if you've got any experience with, working with those platforms, or you have any general thoughts with respect to, how the control of those 2 organizations appear to exercise influence and potentially hinder innovation as a consequence of having to go through the requirements to be on the platform, right? They've got such large reach and distribution that they exercise a lot of control. Any thoughts about that, or any, general opinions?
Yeah, I'm generally in favor of these companies that create platforms that make it easy for a wide group of folks to create value and enjoy that value creation. And at the same time, people will always start to whine about the benefits of this platform, but the reality is you need certain standards so that people can develop something. You need to pick a gauge for the railroad tracks so that everyone can build trains for those railroads so they'd be connected. So I'm generally a fan of companies creating platforms. I think it is their right to enforce these standards. And I think we as a society benefit from those platforms. And by their own success, yes, they start to wield amazing influence. I don't know, the social, political decision makers have to weigh in there, but I personally am a fan of these platforms making it easier for people to innovate and create new value.
Great. I thought I saw a couple of pops, Heidi.
see if I understand this. There we go. That makes more sense. I was going to say, make sure that I understand the question. So you mentioned you don't go too deep into deep tech, but would you consider commercializing university research as deep tech?
Yeah, I think there's an amazing amount of university research out there that could be commercialized, and whether it's for consumer or SMB enterprise, I have no issue with that. I think that's a great play. I think universities probably create tons of IP all day long that doesn't get used. You have to be careful that you have the rights, you have an agreement that you can use that IP. And there's places like Georgia Tech has done a great job of giving their students the ability to leverage the code and the technology they develop. But you do have to pay attention to what your school's rules are.
Yeah. Just to add on to that, there are usually patent license agreements that enable, a commercial enterprise to develop technology within a particular field of use. So there may be multiple applications with respect to this technology, and the university usually provides exclusivity for particular fields. We've got a partner, Kevin DeBray, that works in this field often, and so to the extent that you've got follow-up questions, feel free to reach out to Kevin. He's on our website, and he can provide additional information.
Looks like that's all we have right now for additional questions. Do you have anything else, Louis?
All right, no. So I guess the only wrap-up I'll say, Paige, is this is your opportunity to prognosticate for the rest of 2020 and maybe early 2021. So any predictions that you'd like to have recorded to this audience so that we can come back and have a discussion next year?
Yeah, I feel like that's one of those questions that can just get me in trouble. Yeah, I mean, I'd say I'm overall hopeful for the world, even with the pain that we're feeling right now, economically and socially. It's hard to know why these things happen, but as painful as some of the actors are out there, the political actors and business actors, I think the reality is that humanity is going to win and come through on this. We're going to go through a period of flux, how we live, how we work, what we value, who we spend time with. All that's changing right now, but I'm actually hopeful that the world's a little bit better and that we get to spend more time with family and friends and avoid the long commutes and the really shitty travel experiences and the monolithic office buildings, and that talent really gets an opportunity. One of the biggest trends I see repeat over and over again, I saw it first in Afghanistan and Iraq and then Africa when I funded this company, Andela. And I've spent half my life living overseas. And I was dirt poor, homeless until 5th grade. And this mantra about, talent is universal, that opportunity is not. We've seen that repeat over and over again in pockets, whether that's prison systems or communities, or there's this massive human talent that's been balled up. And a lot of these inefficiencies are created by bias, and they're created by location, like physical location, right? A person is not in the right place to get money. They don't know the right people. They don't grow up understanding someone else, so they have these biases about them. So one of the benefits, I think, of this future generation that grows up so connected in a way that we don't even realize, I think the next generation grows up knowing more people than we ever knew. Right? Their influencers may be from Burundi. Their influencers might be some kid from Costa Rica. They're going to be connected in a way that we weren't as kids and that we weren't as adults. And I think that capital and creators might come together in a way that we didn't because of our focus on geography. So that's generally some of the long-term stuff I'm hopeful of. I also think there's a knowledge economy that emerges. So if you look at Fiverr, does anyone ever use Fiverr for emails or podcasting or research? There's an amazing talent pool there, and there's a lot of lower level talent marketplaces, but I think COVID opens up the opportunity for a true knowledge workplace. And think of the knowledge economy right now. Generally speaking, you have to sell all of your body all of the time to one company, right? Lawyers make a contract where a person, generally speaking, gives most of their effort, most of their time, all of their creations to some corporation. And in turn, corporations are required, or companies are required, to usually hire all of a person. And yet the reality is, when you look at startups, they don't actually need a CFO. They might need 5% of a CFO. They might need 3% of a GC's time they might need 15% of DevOps. But we work in this monolithic structure of you have to pick these discrete units and have them in your business. So now imagine that you don't have to work inside a corporate infrastructure. You don't have to work in an office with a boss or peers watching what you do. Instead, you can work from home. And you're judged more by the work you produce than how you sit at your desk and who you talk to. So you have your primary employer, but I think you're going to be sitting there doing some work and you set your own time, and maybe you see an ad on LinkedIn or Medium, and then you get a little secondary gig doing some analytical work for another firm. And then you start writing some content and you're getting paid piecemeal for writing content. And I think that we might actually see these economies emerge where more skilled knowledge work allows people to work for multiple companies. So that's one big concept I'm kind of looking out for. Like, I looked out for micromobility. I looked at for hospitality for Airbnb. I think the knowledge marketplaces might be a big opportunity in this next decade.
Great. Well, I want to thank you very, very much for your time and your insights. To the extent that members of the audience would like to reach you, is it best to go online, or any contact information you'd like to provide? Please feel free to do so.
Yeah, it's just, even though my name says Laura Craig, that's my wife, you can find me at Paige at outlanderlabs.com.
Okay, well, excellent. Thank you very much again, Paige, and we look forward to connecting with you at some point in the future.
Awesome.
Thanks to the audience for participating. Have a good afternoon, everyone.
Have a good day.
Thank you. Bye, everyone.
Take care.